What's up everybody, Nate here, and the brand new inflation numbers are in, and shocker, inflation went up by an over 40-year high back in June 2022. During the month, inflation rose by 9.1%. That means that all of the goods and services on average in our economy are going up in price, and they have increased in price pretty much every single month since around the mid parts of 2021. Now, with everything kind of getting crazy in our economy right now, a lot of experts and investors are wondering, is inflation going to continue to go up, or is this the highest it's going to go? Meaning inflation has finally peaked in our economy. Well, today we're going to be talking about all of that and much more. We're going to go over what the Federal Reserve is going to do next because of rising inflation, what is actually coming next for this inflation picture, and how all of it is going to affect our economy in 2022 and beyond. All right, so let's go ahead and jump into the numbers. So like I said, inflation in June 2022 went up by around 9.1% year over year. Month over month, it increased by around 0.5%. The Consumer Price Index, which is the entire report that covers all of these goods and services going up or down in price, actually rose in May of 2022 as well. It went up by 8.6%, a 0.3% rise from the month earlier. Now, there was kind of this really small feeling back in April of this year that inflation may have peaked then. Inflation hadn't really gone up. It actually decreased just slightly from March to April by around 0.3%. Now, if we get back to the June numbers, core inflation actually went up in the United States as well. It increased by around 0.5%, just like headline inflation. Core inflation takes out volatile industries like food and energy, and it's the preferred method of measuring inflation in our economy by the Federal Reserve. So both of those things have gone up pretty significantly month over month, and we are continuing to see that in our economy. Individually, and I have a list here that I'm going to read off of, here are all of the things that increased in price year over year. We have gas going up by 59.9% right now in our economy. Electricity is up 13.7%. Food at home, 12.2%, so that covers everything from groceries to the food that you're buying at the store. New vehicles are up by around 11.4%, so that doesn't even include the used vehicle prices, which are also starting to spike in price. Also, we have your takeout food going up by 7.7%. Used cars and trucks, which is completely separate from your new vehicles, up by over 7%. Shelter, 5.6%, and apparel, 5.2%. So it's pretty clear that everything in our economy is going up in price. That is exactly what the Consumer Price Index measures, and it is released every single month. It's going to show the overall health of our economy in terms of inflation. Are prices going way up? Are prices going way down? Now, here is exactly why that matters. With prices going up in the United States, Americans just simply don't have all of the same money that they did in 2020 and in 2021, and all of the money that they do have is slowly getting eaten away in value by inflation. By definition, inflation just means that the monetary supply of a country is rising, and in 2020 and in 2021, the Federal Reserve in the United States federal government printed a whole lot of money, from stimulus checks to President Joe Biden's infrastructure program. Trillions of dollars were printed so that we could redistribute that to businesses and banks and to the American people to hopefully stimulate our economy and keep us out of a recession and keep economic times in a prosperous condition. And that definitely happened over the last 2 years, but not without a lot of problems. You see, when you print a lot of money all at once, that causes inflation because now there's so much money circulating around that people will naturally go out and spend that money. On top of all of that, the Federal Reserve dropped its benchmark interest rates to 0%, making it a lot easier for banks and other financial institutions to lend out money, meaning that interest rates for mortgages and auto loans basically dropped to as close to 0% as they possibly could. That meant that millions of people were going out and buying all sorts of things. They had all of this extra money because of stimulus, and they were saving money buying a home and auto loans, so everything was really strong in our economy for a short period of time. However, supply has not kept up in our economy because of outside factors and because demand is historically high, so things really got behind. And because of economic lockdowns in 2020 and in parts of 2021, things got even further behind. And now we're facing even bigger issues with the war between Russia and Ukraine, causing a lot of energy crises all over the world, and China lockdowns from the pandemic. A lot of our manufacturing and jobs are being done in China. And if China isn't working, and if China isn't producing a lot of those goods and services, well, then we can't get them here at home. And unfortunately, one of the main solutions is more money. Businesses get more money from the federal government. The federal government starts printing a lot more, and that means that people can go out and buy all of the same things they could before. But the problem is that just creates a lot more inflation, because now there is more money that exists. As people buy more things, well, that signals to businesses that, hey, they need to produce more because they're starting to run out. As they produce more, well, they can't do that for free. They have to get more materials and more products and more people and more factories, and all of that comes at a cost that they eventually trickle down to the consumer. Now, over the entire picture and span of the United States history, this hasn't been a lot. Typically, inflation is around 2 to 3%. That is the benchmark rate for the Federal Reserve. They want to print money, they want to stimulate the economy, and they want to try to keep that balance between overproducing money and not producing enough, but they have to keep this, like I said, in a balance. And if they don't, well, then you're going to have massive inflation or deflation. Either one is particularly good because you want to have your money become more valuable every single year, but you also don't want it to go way out of control with inflation. You don't want it to get over 2 and 3% because this is the rate that other countries are also printing money. So you want to keep that in line with what everyone else is doing without overprinting. And over the last 2 years, unfortunately, the United States has overprinted a lot of money. What the big issue is right now is that wages are not going up nearly fast enough to meet inflation. Actually, they are becoming negative. The amount of wage growth that we have seen over the last 2 years is historic. Some businesses are giving out raises of 3, 5, and even 10% to some of their employees on top of a lot of bonuses. Now, that was really easy in 2020 and in 2021 because money was circulating everywhere. It made a lot of sense to do that, and you had to give out those raises so that way people could start affording a lot more things. But the problem is you can't keep up with that forever, and now that there isn't as much money circulating throughout our economy, people are having a problem going out and buying all of the same things. They need more money, but businesses don't really have any more money to give. That is why their wage growth is now negative, even though initially it looked like everything was positive. In June 2022, workers actually lost around 0.1% of their wages. Once again, they're losing this money and they're not able to afford all of the same things. That creates a huge problem in our economy because consumer spending drives most of our economic GDP. So if consumers don't go out and spend, then businesses can't get that money that they need to survive. They can't create more products if they don't have any sales. They can't keep all of the same employees that they hired in 2021 because they don't have as much money. Now, normally this wouldn't be the biggest problem in the world because we would have a booming stock market, a stock market that is on a bull run. But the problem is in 2022, we don't have a stock market that is in bull territory. It's actually a bear market right now because the Federal Reserve is also doing something else to lower that demand in our economy. That is the other solution that we can talk about. The Federal Reserve Bank controls a lot of the monetary policy in our economy, and they basically can tell the Treasury Department how much money they need to print every single year. The Fed doesn't print the money, they just kind of control the idea of what money is. They're supposedly an independent agency, although that has been challenged multiple times by experts and investors. However, they still set interest rate policies in the United States, and like I said, they decide how much money needs to get printed every single year to keep that balance between growth and a shrinking GDP. When they're printing a lot of money and when interest rates are at 0%, people are gonna go out and spend a whole bunch of money. Money is really easy to come by, and these are known as easy money policies. Basically, everyone has easy access to a whole lot of money, so spending goes up, your GDP goes up, and consumers are still driving a lot of that economic growth. However, what is the opposite of that? What we're doing in 2022. So the Federal Reserve is now eliminating a lot of that demand by raising their benchmark interest rates, and they're getting super aggressive to get this done. They raised them back in March by 0.25 basis points, then in May by 0.5 basis points, and again in June by around 0.75 basis points. Now, the federal funds rate sits at around 1.5 to 1.75% in the United States, making it much harder for people to go out and borrow money because banks are having a really hard time getting their money from the Federal Reserve. In June, the Federal Reserve got more aggressive than they have with their monetary policy and interest rates since 1994. They raised them by by 0.75 basis points. Like I said, the biggest hike in a very, very long time. Now, because of this brand new inflation report and the numbers coming in, it looks like the Federal Reserve is going to have to get even more aggressive. Remember, when you print a whole lot of money, when there is a lot of money circulating around, that means people go out and spend. The big problem with that and the symptom is that prices go up in the United States. So what does the Federal Reserve do? Well, they make it really hard for people to go out and spend money. By raising their interest rates, they do effectively that. They make it so people can't go out and get mortgages and can't get auto loans. So a lot of that spending effectively ends immediately. This is probably what's going to happen on their next FOMC meeting at the end of July. They're probably going to continue to raise their interest rates really high, and the Federal Reserve Chairman Jerome Powell has talked about this. He says that a 0.75% basis point hike is likely in July 2022, meaning that it's going to be even harder for people to go out and spend their money. Right now, mortgage interest rates for a 30-year fixed mortgage are well over 5%, hitting even the 6 and 7% mark. So that entire market is completely bleeding people. People cannot go out and buy all of the same things that they could in 2020 and in 2021. So we can pretty much expect the Federal Reserve to continue to get aggressive on inflation for the future. Now, they have to be very careful here because, like I said, it is a delicate balance. If they do too much to our economy, they limit people spending way too much, there's just no money flowing into our economy, well, then that can cause a recession. Businesses don't have any money, nobody can get debt, nobody can spend on credit, whether that's Wall Street or an everyday average American, because interest rates are too high and it's way too risky and expensive to take on debt. That means that businesses can't hire people. In fact, they're probably going to have to lay people off, meaning that economic spending and growth just isn't going to be there, and your economy is going to shrink. So they have to be very careful of that by not raising their policies too much. However, with inflation continuing to go up, that signals to them that they're not getting aggressive enough at this point, and they can continue to raise them. They don't want to bring too much economic prosperity in a time of high inflation because you just can't have this inflation for too long. You can't have the value of the dollar going down. Remember what I said earlier about all of these other currencies around the world raising their monetary supply by around 2 to 3% every single year? Well, the US wants to stay in par with that, so that way our money stays valuable. Our money is the reserve currency of the world, and we don't want to lose that and cause a global economic fallout to happen because we are printing too much money. So we have to be careful with how much money we print in 2022 when we have high inflation like this. And we don't want to create a spiral, because if you continue to print money and pour money into your economy, well, then that is a big problem because now people need more of it. Businesses have to give them more, they have more money to spend, and well, then they can buy more. And then businesses have to once again raise their prices. They don't have enough money to spend. Americans don't have enough money to spend, so then businesses have to give them more money. And as you can see, that is a huge problem because now you just have a situation where you just need a whole lot more money pretty much constantly. The last thing I want to mention about this inflation report is, has inflation peaked in the United States? What is actually coming next for inflation? Well, this is a really difficult question to answer because a lot of the inflation that we're feeling is because of outside factors like the war between Russia and Ukraine and, like I said, China lockdowns. If those things stop and end sometime soon, well then inflation is going to come down in the United States because energy prices and goods and services can finally get here, meaning our supply chain issues have ended. At the end of the day though, if energy prices can come down, like gas prices in the United States, well, that holds a huge portion of the consumer price index, around a third. So with those prices coming down, naturally inflation is going to come down. And many experts and investors are saying that in July 2022, we're probably going to see inflation come down a little bit. But this is just a fake out. You have to look at everything going on. Gas prices have gone down because the United States is pulling so much oil out of its reserves. OPEC is creating more oil, and there's been a big push to create more oil here at home. So gas prices have gone down by around 30 to 40 cents on average. That is really good. However, they most likely won't stay there forever. So we will see inflation most likely come down in July 2022. However, it's most likely going to continue to go back up by the end of the summer, so in August or September. That is the big fake out, but keep in mind that everything else is going up in price. Like I said, apparel prices and shelter and electricity are all going up in price, so you have to keep all of that in mind when you see this big fake out. And overall, inflation is most likely going to stay really high for the foreseeable future because the big cause of inflation is all of that money in our economy. At the start of 2020, we had around $3 trillion in circulation, and today we have over 20 trillion. So there is a lot of money out there, a lot of money to be spent, and that is a big problem for everyone all throughout the world. You just have way too much, and until we catch up to that and demand and supply basically hit an equilibrium again, where you're going to see everything reset in our economy, the stock market and the housing market, because demand is getting sucked out, the complete opposite of what was happening over the last 2 years. And all of that is being caused by inflation. So until all of those things end, the Federal Reserve stops raising its interest rates and all of your global issues go away, you're most likely going to continue to see inflation go up for the future. But now I want to hear from you on this issue. What do you think about inflation and this recent CPI report released in the United States? Do you think that inflation is going to continue to go up, or do you think that inflation has reached its peak in the United States and we are pretty much done talking about it after July? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.